What's going on, everybody? I hope you're having a great day so far. My name's EQ. Welcome to my channel, EQ Trades. And in today's video, we're going to be going over the infamous crossover strategy. If you are in the Epic trading floor or you've watched some of my videos, you might have noticed my charts on my page that look like this, that have a crossover. Today, we're going to be going over and explaining pretty much what all of it means and how to use it to trade for it. But before we get into all that, if you haven't done it before, hit that subscribe button and make sure to like this video as well. And if you want to learn more about the Epic trading floor, make sure to click that link. So the crossover strategy, aka Metacross, is going to be the actual tool name. That's if you're in the Epic trading floor, this is part of being in our community. You get access to the Metacross tool, turn it on and off. And pretty much the two lines are going to be the LRC, which is going to be a linear regression channel, which is going to be measuring linear information. And then the second one is going to be the one that I've actually been saying incorrectly the whole time. I've been saying Nadaraya, but I found out that it was called the Nadaraya. So the Nadaraya-Watson, which is a kernel regression, and as a kernel regression, that means that it's taking in nonlinear information. So the whole basis of the crossover strategy is going into the relationship between linear and nonlinear information and seeing where we can find potential price action spikes and confluences that would attach to the other trading styles that we do, like trading out of an accumulation zone or trading off of Fibonacci. They're all a little bit different, but this tool and this strategy can be used across any market, any time frame, so on and so forth. So the easiest way for me to explain this is that anytime the colorful line is on the left side or on top, or it's colored light blue, that's going to be a bullish crossover. That means that the Nadaraya is going to be on top of the LRC. And vice versa, when they cross over, you can see that this starts to turn into a purple. This would signify a true bearish signal. And at this point, you can tell that the Nadaraya is under the LRC. And when that happens, like as you see down here, that's going to be a sign that we are in a bearish crossover. Now, the big point of the crossover is that the actual cross will take place before price actually moves across as well. So if we're in a bullish trend, the crossover will stay bullish. We see that first sign right here of a crossover, and then we see that a few days later, price actually breaks under and starts to follow into the bearish trend and plays bearish and continues to play bearish until we get that cross again here, and then we start to flip bullish again. Crossover starts to play bearish. When we saw it down here, we crossed bullish and saw a nice impulse move. And it's as simple as that. When the crossover is bullish, you're going to be looking for bullish trends, and ideally we want to be looking for entries and plays after we see something flip into bullish or bearish and we see a confirmation. Once we see those two things, that's an ideal entry point. Now, zooming in a little more, what we mean by the confirmations is that when you do get a crossover, more than likely price will come back and test the LRC point. And when we test the LRC point, price can move on top of it. And if we do see price move over, that is signs of fake outs. That is a great area for price to be faking out. And I'll show you a couple of examples of that as well. But you'll typically see price at some point come back and test this LRC once you get a flip. Even from down here, we had the crossover bullish. And then we had a confirmation for basically 5 days that we were holding bullish, took a move. And when we flipped bearish, took a little while, but we ended up getting a test and a wick up to this point, confirming that it was bearish and started to move to that downtrend to eventually hitting that lower low. Now, what I mean by a fake out, for example, is you can see down here at this point, we have a bullish crossover, but even though it crossed bullish, we can see price continues to pull down bearish. That would be a sign to me that more than likely this would be looking more like a liquidity grab and trying to trap people into thinking that market will continue to go down, or to get stop losses on people that maybe got into a trade here and we're looking to get long, get stopped out, or get a trap, and then price takes off. So even though price was going down, the actual relationship between linear and nonlinear information was showing that this trend was actually uptrending at this point. So this is a really great way to save yourself from fake outs as well. And even when we're down here in certain areas, you'll get little tastes. So we flip bearish, and then we see for a day price does come out and it crosses on top of the LRC. But if you're in the Epic trading floor, you know that when that does happen and we see price come out here, these are great areas, and this is where ideally we look for sniper entries to get into our trades, because these areas have the highest probability of showing fake outs and having fake outs in general. That's pretty much the crossover strategy in a nutshell. If you want access to this overlay, we do offer a 7-day risk-free trial to the Epic trading floor. So when you join, I'll make sure to give you access to this and you can try it out yourself. And if you do have any questions and you're in the Discord, please don't hesitate to reach out to me and let me know. And I'd be more than happy to help you out with any of those questions you may have. And hopefully you have an amazing day. and I'll catch you on the next video.